Joining me today to discuss the week ahead for financial markets is Barry Norman, Director at Investors Trading Academy. So Barry, what will you be keeping a close eye on this week? And likewise, what would you advise traders to look out for in terms of events and data that have potential to rock the markets?
This week is going to be a letdown after all of last week's excitement. But we have a lot of Chinese data coming out this week, including inflation and retail sales. And then we also have U.S. retail sales, which could spark some interest in the markets. And this week's crude oil inventory out of the U.S. will also be very, very important. And, of course, towards the end of the week, we have the New Zealand Reserve Bank meeting. And that might have some interest in the markets this week also.
China has set its growth rate for 7% this year, and according to the BBC, China's Premier, Mr. Li, has stated that the economy would face greater difficulties this year. Could you expand on this statement, and also, what could we expect from Chinese data this week?
Well, the problem that we all see is the Eurozone. When you have one-third of the world, in recession, basically, it's weighing very heavily on Chinese manufacturing, Chinese numbers, and they're unable to reach their growth levels. Even 7.0 might be difficult unless the new ECB programs kick in and help turn around the Eurozone. So this week we had already trade balance data, which was really out of line. Exports soaring, but imports really fell. So this week we're going to be very, very closely looking at inflation data because the domestic economy in China is not doing so well. And then we're going to look at retail sales also because the Chinese data, especially retail sales, is going to have a huge effect on the New Zealand dollar this week and also on the Australian economy.
The Reserve Bank of New Zealand is expected to keep its interest rate the same at 3.5% on Wednesday. In your opinion, what can we expect from the monetary policy statement that follows?
I think we're going to see Graham Wheeler just stay right on target to what he said last month. Basically, that the overall New Zealand economy is doing fairly well, but China could really weigh on it. They're going to be looking at dairy products with the drought hanging in there. And he's been very worried about the escalating housing prices, and the bank said something about it last week. And it looks like they may start doing something on commercial lending for investment property. But I think overall he's going to say that we have a challenge, and he's going to write off the low inflation due to oil prices and just stay pretty much on target for what he had for forward guidance. And we'll probably see an interest rate increase not till December. And then he wants to shoot for 4.25 by mid-2016. I think he'll pretty much stay on target, and I think he'll keep the same basic rhetoric.
Thank you very much, Barry. We will be keeping you up to date on all the topics mentioned, so join us throughout the week for news, analysis, and exclusive interviews. Goodbye for now.